I got a message from a mentee asking me to explain what is inducement, because he said he bought a particular pair, he got stopped out, and he eventually moved in his direction. So when he sent me the chat, I discovered that it was actually the inducement trap. So I'll be doing this video because of him, and hopefully he helps some people out there. So if you are finding it difficult to spot out inducement in the chart, I want you to watch this video today. What is inducement? Inducement is an incomplete pullback that forms in the market with the intention to lure traders into taking a particular position, stop them out, and eventually move into the direction. And someone is out there asking, what is an incomplete pullback? Guys, before we continue, please click on the subscribe and like button and also leave a comment. Thank you. An incomplete pullback is a pullback that is not up to 50% of the swing you are about trading. So let's take this as a swing high. Let's take this place as a swing high and swing low. So these are swing low and these are swing high. If we take this place as our swing low and here as our swing high, then we can see clearly that this pullback was not be up to 50%, or it didn't fall below the 50% of the range. Remember, we are only looking for pullbacks that is below 50% of the range to avoid inducement. Now, since this pullback was not below 50%, what happens was its price actually range here, broke structure, and what a lot of traders will now do is, because price broke structure here, they will mark out this origin as their level, and as price came back to that origin, they will put a buy position here with their stop loss below the just few ticks below the range, and they will definitely want to target this swing high, forgetting that this initial swing had an incomplete pullback. So if we play price here and see what actually happened, you will see that they eventually got stopped out before price actually moved their direction. Inducement will always give you few pips to encourage you, and later you will get stopped out. And I often hear a lot of traders say, I was in the position, I got stopped out, and price went in my direction. So it is not as if you were wrong about the trade. As you can see clearly here now, price stopped them out, tapped into this region here. Now, if we will take this as our swing low and swing high, we will see clearly that this bullish zone here is below the 50%. To avoid inducement trap, you must only focus on POI that is below 50% of the swing you are trying to trade. Now, I often get the questions that, okay, how am I sure that this particular POI is going to hold? So there's something I often do whenever price taps into any POI I want to trade. I often go to either the 5-minute or 1-minute time frame to see how price shifts structure. Let me take this out. This is our 1-hour bullish POI. So if we take a replay here and see what happened when price came here. The market is fractal in nature, so if we are experiencing inducement trap on the higher time frame, we are likely to experience inducement trap on the lower time frame. When price tapped this POI, all you need to do is to start watching out how price is respecting bullish orders and invalidating bearish orders. That will be how you're going to frame. Like currently, this is a previous high, so I will want to see price invalidate this high, which I just saw here. Now, this is another high I will want to see price invalidate for me to know that, okay, we're actually establishing a bullish environment. I want to see price take out this high. And I often tell people something, that there are places I call them money points in the market. It means transaction was once done there. I will not take this place as my POI. Why? Because in this swing, now let me pause this. A lot of buyers will want to take their buy position here or here, which I will not do. Why? Because I know this is a swing low, probably a swing high. This level or this level will be an inducement trap. So I don't actually know what happened, but let me play price to see what happened. So as you can see, this POI is trying to trap in buyers, right? But actually I will not buy here. Why? Because this place is an inducement level. Price just invalidated. Okay, let's assume you placed your buy here. You are already out of the market. Now this is where we are entering. So I want to see price invalidate this zone and also this zone and clear out this external buy side liquidity. Then if price should clear out this buy side liquidity, I am very, very sure that buyers are establishing their environment. And I know that, okay, I won't get caught in any inducement trap anymore. Because let's be honest, this POI here is below 50%. So I am very, very sure that it's going to hold. And whenever I am buying, there are two things I look out for. A zone that is going to push price down and a zone that is going to reject price up. So this zone here pushed price down and this zone is pushing price up. This place would be a nice place to take another buy position. Why? Because here is supposed to reject price down and here is supposed to take price up. So as you can see, buy is the buyers are clearing the buy side liquidity, establishing strong bullish buyers. Now, is this not a perfect setup and a perfect way to trade? So why rush? Why? Let me pause this and explain something. So why are you always in a rush to take positions? Why? Especially you that is trading a small account, you know that just 20, 30 pips, your account is fried up. Quality, good setup like this does not happen every day in the market. If I want to do a quick recap, inducement is an incomplete pullback that forms in the market with the intention to lure in traders, give them little pips, stop them out, and eventually move in the direction. I can even use this lower time frame to explain inducement. Now, inducement is an incomplete pullback. This place is termed to be an incomplete pullback. Why? Because if we plot our fib from here, right, from this swing low to this swing high, we can see that this POI is not below the 50%, and we can see that this POI here is below the 50% level. So the best advice for you guys is to avoid any POI that is above 50% and focus on POI that is below 50%. When price taps into your zone, you must come to the lower time frame to see how price is establishing the bullish environment, invalidating bearish structures. This will help you to know that the buyers are gaining momentum in the market, and this will help you frame your buyers probably short term or long term. So guys, I think this will bring us to the end of this video.